Hey everyone, welcome back to Corporate Decoder. In this video, we will talk about Avaí Bio Incorporated's latest 10Q report, their financial report for the last 3 months of 2025. Get ready for a wild ride because this company has definitely been busy making some interesting financial moves, and we are going to decode it all for you. Before we dive in, if you love getting these unfiltered insights from SEC filings, make sure you hit that subscribe button. And if you want to hang out with like-minded finance enthusiasts, join our Discord community. The link is in the description below. Alright, let us get straight to it. This document is a quarterly report, basically a financial checkup for the company, AVAI BIO Incorporated, formerly known as Avaí Technologies Incorporated. It gives us a peek into their financial health at the end of December 2025. First up, let's look at the consolidated balance sheets for the 31st of December 2025 and the 31st of March. 2025, think of this as a snapshot of what the company owns and what it owes at specific points in time. Assets are what they own, liabilities are what they owe. As of the 31st of December 2025, the company had total assets of $172,912. Compare that to the 31st of March 2025, when it was $224,745. That is a considerable drop in total assets. Now for the liabilities. Total current liabilities jumped from $1,788,617 in March 2025 to $2,967,398 by December 2025. That is a jump of almost 66%. This means the company owes a lot more in the short term. And then there is the stockholders' deficit. They have an accumulated deficit of $5,612,842 as of the 31st of December 2025. That is a huge negative number, meaning the company has lost more money than it has made since it began. This grew significantly from $4,118,510 in March 2025. Next, let us look at the consolidated statements of operations for the 3 and 9 months ended the 31st of December 2025 and 2024. This shows us how much money the company made or lost over a period. For both the 3 and 9 month periods in 2025 and 2024, the revenue was a big fat $0. Yes, you heard that right, no revenue. Despite no revenue, they still had operating expenses for the 3 months ended the 31st of December 2025. Total operating expenses were $509,774, a nearly 20% increase from $428,898 in the same period in 2024. For the 9-month period, operating expenses decreased by 11%. From $1,571,238 in 2024 to $1,392,029 in 2025. This decrease seems mainly due to lower consulting and amortization, and because they had expenses but no revenue, they had a net loss from operations. For the 3 months ending the 31st of December 2025, the net loss was $553,727, which is a 22% increase in loss compared to $452,298 in 2024. For the 9 months ending the 31st of December 2025, the net loss was $1,494,332, a 7% decrease in loss compared to $1,606,187 in 2024. So, while the 9-month loss got a bit better, the most recent quarter saw the losses go up. Now let us look at the consolidated statements of changes in stockholders' deficit. This table shows how the equity or deficit changed over time due to things like issuing stock, or in this case, mostly a lot of losses. Look at the very last row here, balance the 31st of December 2025. Their total stockholders deficit is a whopping negative $2,794,486. This is a significant increase in the deficit from the previous periods. Let's check the consolidated statements of cash flows for the 9 months ended the 31st of December 2025 and 2024. This tells us where the cash is coming from and where it is going. During the 9 months ended the 31st of December 2025, net cash used in operating activities was $959,017. This is a small increase of about 1% compared to $973,110 in 2024. Basically, they are burning through cash from their day-to-day operations. But here is where it gets interesting. Net cash provided by financing activities was $928,366 for the 9 months of 2025. This came from things like issuing capital stock, convertible notes, and loans from related parties. This is how they are keeping the lights on. In 2024, it was even higher at $975,899. Diving into the notes, we learned that AVAI BIO Inc. is a technology company focused on acquiring and developing artificial intelligence technologies and providing it consulting services. They mention acquisitions like Avaí and Instant Fame and a joint venture with Tech. Now, this is a really important note. They explicitly state there is substantial doubt about the company's ability to continue as a going concern. This means an accountant looks at their financials and says, with these losses and no revenue, it is not totally clear if this company will survive. They are relying on getting more money from investors. Under intangible assets, we see they have capitalized various development costs like chatbot development, mobile applications, and even an RSS database. As of the 31st of December 2025, the total intangible assets net were $112,060. This part details loans from insiders. For example, their secretary Natalija Tunevic loaned them $114,328. Director Vitalis Ratius loaned $128,563, and shareholder Igor One Corp loaned $293,553. These are mostly unsecured and non-interest bearing. This is a common way for investors or executives to fund a struggling company. Here we see more details on convertible notes and loans. They have a history of issuing convertible notes which can be converted into stock and taking on various loans. Some notes have conversion prices with discounts, and there are limitations on how much they can convert. This section details their stock. They have authorized common stock, preferred stock, and series of preferred stock. We see many instances of issuances related to acquisitions, debt cancellations, and bonuses. For example, on the 25th of April 2023, they issued 26 million common shares for the Avaí acquisition. And on the 27th of November 2023, they converted series of preferred stock into over 26 million common shares. Moving on to item 2, management's discussion and analysis. This is where the company talks about its own performance. They reiterate their business is acquiring and developing AI technologies and providing it consulting. They mention acquiring Avaí and their joint venture with Tech. In the 3 months ending the 31st of December 2025, they had no revenue. Operating expenses were $509,774 compared to $428,898 in the prior year, an increase of nearly 20%. The primary drivers for this increase were laboratory services and marketing expenses. Other expenses, mainly interest and discount on convertible notes, also increased significantly to $43,953 from $23,400. This resulted in a net loss of $553,727, up from $452,298 in the same period of 2024. For the first 9 months of 2025, there was still no revenue. Operating expenses fell by 11% to $1,392,029, from $1,571,238 in 2024, mainly due to lower consulting and amortization expenses. However, other expenses almost tripled to $102,303 from $34,949, largely due to more convertible notes. The net loss for these 9 months was $1,494,332, a 7% improvement from $1,606,187 in 2024. Let's talk about liquidity. As of the 31st of December 2025, they had $50,402 in cash, down from $81,053 in March 2025. They also had a working capital deficit of nearly $3 million. The total liabilities were over $2.9 million. With a stockholders deficit of almost $2.8 million and an accumulated deficit of over $5.6 million, the financial picture is pretty stark. The cash burn from operations continues, with over $959,000 used in the 9 months of 2025. Financing activities provided $928,366 in cash, primarily through issuing stock and taking on debt. They explicitly state again that there is substantial doubt about their ability to continue as a going concern. This is a big red flag. They are relying heavily on future financing and achieving profitability, which are big uncertainties. In terms of controls and procedures, management admitted that their disclosure controls and procedures were not effective as of the 31st of December 2025. This means they do not have strong enough systems in place to ensure all required information is captured and reported on time. As a smaller reporting company, they are not strictly required to list risk factors, but they do mention a few crucial ones. They highlight their limited operating history in an evolving industry, making it hard to predict future success. They emphasize that they have not achieved profitability, and their ability to generate positive cash flow is uncertain. They also point out the need for substantial additional capital, warning that this capital might not be available on acceptable terms. They believe they need about $10 million more to pursue their business plan. They warn that future equity offerings could significantly dilute existing shareholders, and debt financing might come with restrictive covenants. Their stock is traded on the OTCQB, a less regulated market. This means trading can be thin and volatile, making it hard for investors to sell their shares at a fair price. They also caution that their stock can be subject to penny stock regulations, which involve more stringent rules for brokers and investors, potentially limiting liquidity. A key risk they highlight is the potential inability to commercialize their acquired technologies like AVAI or Instant Fame, despite significant investment. Interestingly, during the 9 months ended the 31st of December, 2025, no director or officer adopted or terminated any Rule 10b5-1 trading arrangements. This implies no significant insider trading activity from these plans. Finally, the signatures confirm that the company's chief financial officer, Vitalis Ratius, along with other officers and directors, have reviewed and signed off on this report. Now, for my take on this, AVAI BIO Inc. is in a very precarious financial position. They have no revenue, significant and growing losses, and substantial liabilities. Their continued operation hinges entirely on their ability to secure more funding, which is frankly a huge gamble. The fact that they admit there is substantial doubt about their ability to continue as a going concern is not a good sign. While they are investing in AI technologies, the lack of revenue generation and the increasing deficit are massive concerns. The related party transactions and convertible notes suggest a desperate need for capital common in struggling early-stage companies. On the positive side, they are actively pursuing joint ventures and acquisitions which could be a path to future revenue, but there is no guarantee they will succeed. The company's direction seems to be evolving, as indicated by the name change to AVAI BIO Inc. to better reflect their business. However, the core issue remains the same: demonstrating a viable path to profitability and sustainable operations. Alright, that is our deep dive into AVAI BIO Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more corporate deep dives. Don't forget to check out the Discord in the description to join the conversation. Thanks for watching. See you next time.